Hello there traders, welcome back to another video. In this video we're going to talk about CRT, candle range theory. So the topics that we're going to cover today are introduction to CRT, how to use CRT from the higher time frame to the lower time frame, invalid and valid CRT model, candlestick that you will encounter when using CRT. Obviously there will be some flaws while using this CRT model theory or some whatsoever. CRT key levels. And also I have a bonus pattern that you have to understand because it's very powerful. And also watch this video till the end so that you can get the whole PDF of this video. So let's get started. And before we begin, guys, please read the disclaimer. You can pause the video. So the first thing that you have to understand is that candle range theory requires only 3 candlesticks. Okay, we have the first candlestick, we have the second candlestick, and then we have the third one. This one here, the first one, mostly it will be an accumulation phase. This one here, the second candlestick, this one has to manipulate the low of this previous candlestick. On the other hand, the second candlestick here has to manipulate this high here. I know I made 2 different candlesticks here, but I will explain why I did this. Okay, so the third candlestick is the one that has to move very aggressively. Okay, that's how you should understand it. So it's like this. Let me clear everything. This is the same as AMD. We consolidate, manipulate, and then destroy, distribute, or just anything that you want to call it. And then we have also the CRT high, the CRT low, the CRT high, the CRT low. Here I have used this candlestick here because even if I have used this one here, it won't work out as a CRT model because another high has to be broken. And guys, you have to remember, even if we have something like this, because I know most of you won't agree with me, we can have a candlestick like this. This one is a bearish candlestick here, okay? And then we have another one like this. This will be our bullish candlestick. So do you know this thing, they are 99% almost the same? I know some of you will disagree with me, but please go and backtest this thing because this video is not about that. But if you compare them closely, you will see the very simple section every time, because I know some of you have seen a lot of CRT videos, but there are so many information that is missing right there. So the first candlestick, guys, this one is the accumulation phase. The second one is the manipulation phase. So meaning this candlestick here has to be available for this thing to work, okay? And sometimes you see this wick here on the third candlestick, because the third candlestick is the one that you're going to make an entry. You see this wick here. I know most of the time when you watch some CRT videos, you'll see that they say trade 50% of this candlestick. It doesn't work like that, guys. Price action will never always respect 50%. You see this wick here, sometimes it can touch here on the open and close, and then here sometimes it can touch this low here. So we have only two things here on the close of this bearish candlestick and here on the low. Sometimes you will see them a lot. So if you want to make your potential reversal zone or your point of interest, just make sure that this one here is included when you trade this candlestick, and even this one is included. This will be your point of interest number 1, and then this will be your second. I hope you understand me on this one. And sometimes it can be a little bit different. Like for example, on this side here, you can see I made it very clearly. That is why I made 2 different things so that I can demonstrate everything easily. You can see from here, this candlestick, the third candlestick, affected this first candlestick's high. You can see there's no 50% here. Price eventually shoot to the upside to respect this candlestick here. That's how you should understand it. It will be easier if you understand it this way, okay? But let's move forward so that we don't make this video any longer. This is the higher time frame. This is the higher time frame. We have the first candlestick, which is the bearish candlestick. This is the 50% to be the initial first take profit level, and the final CRT high to be your take profit, the final take profit. But it doesn't always work like that, guys. You can't enter here and then expect the market to just push here. You'll just take 1%, and while the market is going to move more than 100%, also. So guys, you can see on the first candlestick we wait, the second candlestick has to be bullish, and then also it has to trade below this low here and then close bullish. Then is when we can wait, because as I said before, this is your first point of interest, then this is your second one here. Then you wait for the market to push to the upside. Because we are on the higher time frame, we will move on to the lower time frame. This is the lower time frame here. Let's look at this lower time frame and understand it clearly. We can see that this is the CRT low, this is the one here, and then we have the CRT high here. So in the lower time frame, let's say right now you are on the 4 hours, then you move on to the 15 minutes. You will see the price action will be at least zoomed in. This one will be a first profit, take profit 1. The CRT will be a second take profit. And then from here, you have to do your analysis. You can see that we have some sort of a head and shoulder, and I know someone will say it doesn't work anymore. And then we have a demand zone here. You can enter here using this head and shoulder pattern on the entry here, while your stop loss is here, take profit here, and then the second take profit will be there. Or unless on the demand zone, if you want to wait for a real confirmation, you can wait for this candlestick to close bullish, this one here to close bullish, and then make your entry. Okay, that's how you should trade it. So let's move on to another example, because this one was a bullish example. Let's move on to a bearish example here. It's the same thing again. We have the first candlestick, we have the second candlestick. This one is the distribution. This is the AMD. This one is a manipulation, and then it closed bearish. So in the lower time frame, you'll be looking to enter around here or maybe around here. It all depends on how you want to trade it. So let's move on to the lower time frame and see what happened. In the lower time frame, you can clearly see that here we don't have anything. This is our CRT high. This is our CRT low. And then even if we take 50% of this, it will take us around here. But we can also see that we have a breaker block. The market traded above, came down and broke this. This one here was a supply zone. It was a demand zone before. But because it has been broken, the market will come and retest it to be a breaker block. So when the market comes to this breaker block, you can wait for the market to close bearish. Put your stop loss above this candlestick here, above this candlestick or this candlestick, and then you trade to the downside. That's how simple it is to understand this. So for now, let's move on to invalid CRT and valid CRT. For a CRT to be valid, price action candlesticks has to liquidate the low and close bullish. Okay, meaning this candlestick has to close and it has to sweep the liquidity below. And most of the time, this candlestick here will look like a hammer, or maybe a hammer, a shooting star, etc. Just a rejection candlestick. It will be just a rejection candlestick, and it has to have this wick here to show that price has manipulated. Like the market will be going like this, and then suddenly a sharp move to the downside, and then we have this. That's what we need. We need this kind of behavior in the market. So this one will be valid because we have a rejection. Once you see this kind of pattern here, that means you can trade the CRT. So let's check this one. This one is invalid because we don't have a wick that is trading below. Okay, we don't have this wick here because we have to see a spike. So that means this one is not gonna work because there's no sweep in liquidity. Price closed, but there's no sweep in liquidity. So this one will be invalid. So let's check another one here. Let's say we are still in a daily time frame and you see something like this. This one is not confirmed because this candlestick has not been closed yet. And sometimes you will see that this candlestick here, it might close something like this, but if it does something like that, that means that thing is invalid, guys. We don't have to trade. This one is wrong. Okay, you'll be wrong here. So again, guys, if you're enjoying this video so far, please consider subscribing to the channel. It will help me a lot to give me motivation to post a lot of videos. So let's move on to show you some CRT warnings. This is the kind of candlestick that could appear on a candle range theory model, because everything that you see online, you have to find the wrong things that might happen. That's the only person that can do it, and that's me. I like to do those kind of silly things. I like to find a working strategy and find some mistakes. I want it where it fails a lot so that I can understand it better. So we have the CRT high, have the CRT low. Okay, this one is perfect, and then that means in the lower time frame you'll be looking to go short. But then on the second candlestick, it do the same thing. It breaks this candlestick, and then you'll wait for the market to shoot to the upside. So this is you'll be confused on why is it happening, what's going on here. So I like to tell people that here you see this two candlestick, this is the past. We are focusing on this one. So here 1, 2, 3, this is the past. We don't focus here, we focus mainly on this now. Okay, that's one thing you should understand, because if I tell you the truth, the only reason is that most people will avoid to get out of a trade and enter a correct trade just because they trust their strategies way too much. But in this case, that's one thing you should understand. The past. This one here, this is the past. That's one thing you should focus on. Let's look at the second manipulation here. So right now we will focus on this second manipulation. We have the candle range theory here. Price manipulate this high with this candlestick. This is your first, second, and then we have the third. And obviously you'll be looking to enter the market on this candlestick, but it trades above this. So don't be scared when you see something like this, guys. If you watch this video till the end, you'll understand why this one is so powerful. The same thing here. We have the CRT, price manipulate here. But the time you want to enter the market, price manipulate this. So even if like you use those buy limit or sell limit order, that means you'll be stopped. So that is why I like to confirm my trades so that I can have an edge over those buy limit and sell orders. It's better to miss a trade than to enter a trade that is not confirmed. So if I see something like this, I approve this. This is 100% a strong trade. Not really 100%, because I know some of you will bash me out. This is just a 60% to be on the safer side, because I know some of you will like the comment section a lot. So let's move on. Let's move on to CRT key levels. The CRT key levels is pretty much simple. It's where you will be looking to find those CRT high and lows. Most of the time you'll see them on the higher time frame, point of interest, supply zones, let me write support and resistance, trend lines, maybe you have Fibonacci, your Gartley patterns, Elliott wave theories, anything, your indicators, just anything that you want to put just to become a better trader is fine. This one here is just a demonstration on where you might find them most of the time. Okay, let's find another one. Here you can see that we have an order block here, and then you will wait, and then the market will give you a CRT high and low, give you a rejection candle here. This will be your first, your second, and then your entry candle, which is the third candle. And guys, look here. You see, on the third candle, sometimes the price action will come to this. Please, if you backtest this, you'll see this a lot. Because I see most of you guys focusing on 50%. I don't know why 50%, guys. But focus on this previous candlesticks high. I think I have made a video about that. But if you text me on Telegram, guys, I will forward you an example that is happening every week. And also, don't forget to join our Telegram. The group will be in the description below, and also our Discord is free. And also to get the book, guys, the link will be in the description below. You'll find it in Telegram. After we have reached 1,000 followers, I will post the PDF in there. So this one here, we have an inverted fair value gap. We have this move to the upside, and then we have a sharp move to the downside. Then price come and made the same thing. CRT high, CRT low. You wait for the market to spike to give you a rejection candle, rejection, and then when the market retraces back in the lower time frame, you will be looking to enter here on the previous candlestick's high, close, or even here on the open of the bearish candlestick. It just depends. You can see here we have the open, the close here, and then we have the open here. You can choose this one here, this one, and this one. It's fine, as long if in the lower time frame you can see a correction and then a zone plus a confirmation candle here, confirmation candle, and then you can enter, put your SL, enter the market, and let the market ride. Also with proper risk to reward. Okay, guys, this is the favorite part of the video that I have been waiting to reach. This one here is a bonus pattern that I want you guys to study. Okay, I'm going to explain it very slowly. Please focus on this one. We have this candlestick, bullish one, and then we have the bullish one. We have the first red candle. We have the first one. We have the second two. On the third candlestick here, the third candlestick, price trades above this candlestick's high. Guys, just know that most of the time, the fourth candlestick is quite too strong. Following this trend, let me show you another one. I hope you understand this first example here. And price also, guys, let's say right now you have entered, the invalidation is here. Price is not likely to come and pass this. So this is your safe SL. But I didn't say it, guys. I'm just saying, because I know some of you will risk a lot of money and then start text me because you are risking. When I tell you to show me a chart, you don't follow all the steps. Anyways, let's move on. This one is another example. We have one, and then we have the first candlestick, one, second candlestick, and then on the third one, price breaks this. Okay, we have a break of this second candlestick. Like as I said before, here. Then you can see this is the fourth candlestick. This one is an invalidation. Price is not likely to come above this. But here you can see price was very slow, but look at the fifth candlestick. It was strong. I hope you understand this, because this one here, this is not a full video. I'm just giving you a bonus for you to go and practice. The same thing, guys. Here you have 1, 2, third candlestick has to break this. This one here is quite too strong, but you have to wait for the last example of the video. I'll show you everything step by step on this one. So right now, let me show you how this amazing pattern works. Right now, we can see that we have CRT low, CRT high. Okay, so that means we'll be waiting for the market to make a move to the downside so that we can trade to the upside. Okay, it moved to the downside. So for safer stop loss, that means we can put a stop loss here. So let's look. Okay, it moved to the upside. But what if you have missed this trade here? So we start again. We have 1, we have 2, we put a line here. So that means we will wait for the market to give us a blue candlestick here, spike below this second candlestick here. That's when we know the market might be strong. So we can see, okay, the market traded below. So right now I want to enter, and I know this will be your invalidation. So that means any retracement in the lower time frame, I'll be looking for the market to move to the upside. That's how simple it is to understand it. So look, guys, any retracement, boom, and you catch this big move with a simple knowledge of trading. You don't have to know a lot of indicators, support and resistance. You just need to learn price action. Also, guys, if you have any question, text me on Telegram. It's free. I won't bite. I'm a person like you, so you don't have to be afraid as if like I won't respond. Just come to Telegram, text admin, and then I'll respond to you. So look at this one here, the last example. We have this move here. This one, let me start from the beginning. We have the CRT low, CRT high. But then, because we have the first candlestick, which is the accumulation, we have the second candlestick, which is the manipulation, third candlestick, which is the distribution. But look at the distribution, guys. The market traded above the manipulation. So that means on the third candlestick, we have another manipulation. So what's going to happen here? So you see, this is the mistakes that you are going to encounter when using CRT. This thing will happen if you use buy limit or sell limit orders. But then you don't have to be scared about this kind of thing, because as I said before, you can clearly see that we have the first manipulation, M1, we have M2, and then we have the strong move. You see, guys, on the third candlestick here, any retracement, price will just shoot low. Plus, we can also see that we have some rejection. To the upside, it's not very strong. And look how the market moved. Shoot to the downside very aggressive. And yes, sometimes this pattern can fail. I just noticed it while I'm making this video. You can clearly see it here. 1, 2, 3. But price did not shoot to the downside. Let me find another one. 1, 2, 3. You see, you think maybe it has stopped you out. No, I said invalidation is on the first candlestick. Okay, you have to remember first candlestick. Or maybe I didn't explain this properly. Let me show you. We have this first, and then we have the second, and then we have the third. On the third one, we can clearly see that the market traded above this second candlestick's high. But then here, this is where we will put our stop loss. Then any retracement here, we'll look to sell, and then stop loss is safe. So you see, this one is confirmed, but this one has failed. so it's not a big. This one is also a perfect CRT, and also we have this one CRT. I don't think we have any right now. So I guess, guys, this is the end of our video. I don't want to make this video any longer. I guess I'll see you on another one. Please go and back. You'll find this PDF in the Telegram description, the Telegram files. Also, those who are going to join on Discord, I'll try to send it there too. So guys, I guess I'll see you on the next one. Oh, don't forget to subscribe to the channel, guys, and like the video. Leave a comment below for any topics that you want to be covered. So I guess I'll see you on the next one. Stay safe and always use a stop loss.